Hi, young Bera. Good evening. Young Bera, you're the first person in class today. That's very good. Oops. Hello, Mercy. Hi, how are you guys doing? Hi, Nollies. I followed you all the way from Instagram. Much love. Hi, Mr. Fon. I cried. I almost cried that you won't come here today. I am very sorry. I am very sorry. Yesterday I had internet failure. I am sorry. Don't worry, we'll have an amazing class today. Okay, 12 of you are here. Please like our YouTube video. Just click the like button. Please. Then we'll start. So we'll do like a revision of what we learned on Monday. Was it Monday or Tuesday? On Monday, yeah. Before we get into today's activity. Good evening, Awa. How are you? Let's give few minutes for others to join us. Khalid boy, I've followed you from Instagram, liking your videos. Oh, I'm following. Thank you so much, Khalid boy. Much love. Thank you. Good evening, engineering and vision. Thank you all for joining. Let's wait for others to come. Let's just give them 2 minutes. Oh, I am doing fine. Thank you. Kwasim. I don't know if I am pronouncing your name well. You're welcome. Oh, today, if you're just joining us new, indicate. I follow you on all apps. Wow. If you are just joining us today, indicate. Because I think I can remember the names of those who were there from the first day. Okay, Envision is new. Petrus is new. Okay. Oh, Kwasim is new too. All right. Crusade is new. I think we have more of new people. Okay, Godwin, new. Belmundo, Ashley, new. Wow. Francina, new. Then where are the others who were there from the first day? Okay, I remember you. Don't worry. I couldn't attend yesterday because the network wasn't the best. I totally understand. I totally understand. So at exactly 10 minutes past 8, we are going to start. So the others have 2 minutes to join us. Yeah, we the old. Yeah, young Bera. Young Bera, I'll make you the class captain, the course delegate. So we are going to begin with a revision, right? So we are going to revise all we learned last class. because we cannot be going in front and some people are not on the same pace. Yeah, so we need to ensure that okay, everybody is getting it, everybody is grasping, everybody is understanding everything we are saying. So we'll do a quick revision so the others who are new, they'll catch up, because I think the first day we did just basics, so I think others can really get it before we continue from where we stopped. Please like the live video, please, please, please. Good evening, Setson. Thank you for being here. Okay, great. So this is 10 past 8, so we can start. All right, so from the first day, I introduced myself. My name is Emilienne Bejuande, aka FX Buddy. I'm a Forex trader. I have been trading Forex for 1 year, 4 months, 4 to 5 months now. And I am a master's degree holder in accounting and I have a business, a, a clothing brand. Yeah. So this is my trading space. I'll show you guys. Yeah, so me organizing this particular class is just to share with you guys what works for me for free, right? So I just want to share my little knowledge in forex trading with you guys. That's why it is a beginner class, so that okay, at the end of this particular class you know where to start from. Yeah, so at the end of this class, you know what forex trading is, what we trade in forex, advantages of learning how to trade, and I'll also share my trading strategy. It's not like mine, but I'll share the trading strategy that I was taught and that works for me. Yeah, so that's the essence of this, just for sensitization and to learn and to guide others to get into foreign the right way. Yeah. So from the first day, we started with the introduction to forex trading. Like, what is forex trading all about? You've been hearing about forex trading. Now, what is this forex trading all about? So we define forex as foreign exchange. So forex is just the short form of foreign exchange. We went on to define trading. Trading is just the buying and selling. So trading involves buying and selling. Now contextualizing it to forex trading. Forex trading is the simultaneous buying of one currency and selling of another. That's it. So forex trading is the simultaneous. Simultaneous there means two things must be involved. One that is buying and another that is selling. So we define for forex trading as the simultaneous, and we highlighted that simultaneous must be in your definition of forex trading, because as one buys, another one sells down. Great. We went on to giving the advantages of learning how to trade. What you will benefit from learning how to trade. The first advantage is that the forex market is the largest. Repeat after me. The forex market is the largest financial market in the world. The forex market runs $6.6 trillion a day. As at the last time I checked, I think by now it should have gone higher. Yeah, so the market is the largest financial market in the world, meaning the market, there is liquidity, that is, there is cash available in the market, there is money in the forex market, and the market moves, right? So this availability of cash gives you room to get in, to learn this particular skill, enter there, buy your own, sell yours, make profit, and you win, right? So there is a lot of money in the market, giving all of us opportunities. Next, you can trade forex from anywhere. The market is the market is accessible. You can trade from anywhere. You could be at home, in the market, at work, in the hospital, in America, in Africa. You could be anywhere in the world and have access to trade the forex market, as long as you have a mobile phone and internet connection with a trading account. You're good to go. Next, You can trade at any time. The forex market is open 24/5. That is 24 hours a day, 5 days a week. So the market is open from Monday till Friday, right? And 24 hours a day, meaning if you're somebody who sleeps a lot, right? So you can sleep at night, you wake up in the morning, you still have time to trade. You can trade in the afternoon, you can trade in the evening, you can even trade late at night. So the forex market is open 24 hours a day, 5 days a week. Next advantage is there is low transaction cost. By low transaction cost, I mean you don't need to pay anything to have access to the forex market. Nothing at all. When you guys, I believe most of you here have your trading accounts. It's a must. You need to have a trading account to be able to trade forex, right? You need to have a trading account to be able to trade the forex market. So I sent a link to create your account. It's completely free in the Telegram channel. You need to have it because tomorrow we'll be getting to technical analysis, that is strategy class, right? Teaching you how to analyze the market, know when to buy and when to sell. So you need to have a trading account. And now you realize that when creating your trading account, it's completely free. So there is low transaction cost to get into the forex market. You don't pay anything to have access to the foreign exchange market. So anybody can have a trading account. You just need your name, a national identity card, a phone number. You're good to go, and those are necessities that we all have. So the transaction cost to having access to the forex market is completely free. Next, okay, I have created mine because of verification. Oh, verification is actually easy. You could verify with your, well, it depends on your location. We'll talk about that later. Okay, right. Another advantage of is FS. The broker you should use, the broker I recommend is Xness, right? Regulated, reliable, fast, and trustworthy. So the broker I recommend is Xness, and the link I sent to the group for you all to create your accounts is an Xness account, right? So another advantage why you should learn how to trade is that with this your particular knowledge in trading for forex, you can trade other things. You can trade other commodities, right? So you could trade commodities like gold, silver. You could trade stock. You could trade cryptocurrency like BTC, Ethereum, Litecoin, and a lot more. So forex gives you opportunity to trade other things aside currency pairs. Right. After the advantages of learning how to trade, we went on and saw what we actually trade in the forex market. And we said we trade currencies in the forex market. So currencies is what we buy and sell. That's how the simultaneous happens, right? Now we don't just trade currencies, we trade these currencies in pairs. That means we pair them together and we trade them, meaning in a currency pair one currency buys and the other sells. That's how forex works. So we saw the major currencies, and we said major currencies are like the big currencies, right? The high influence currencies that actually influence the forex market the most. They are the major currencies that make the market to have high liquidity. They are the major currencies that make the market to actually run that $6.6 trillion in a day. We saw major currencies like USD, the king, GBP, AUD, CHF, NZD, JPY, um, what else? What am I not calling? CAD, Canadian dollar. That's 7. It's supposed to be 8. What have I not called? NZD, CHF. What have I not called? And anyways, we have, wait, I must call it. Okay, euro, right? Euro. So we have 8 major currencies, and I have listed them out. Now, so those are the major currencies that actually influence the forex market. So they are like the big currencies. Now, we went on by saying, okay, we don't just trade these currencies alone, we trade them in pairs. Now it brings us to currency pairs. These 8 major currencies, when paired together, they give us 28 currency pairs, right? When paired together, give us 28 currency pairs. And now these 28 currency pairs, we have major currency pairs and minor currency pairs. For major currency pairs, we have 7. So we have 7 major currency pairs, and the characteristic of these major currency pairs is that they are pairs that are traded against the USD, that is the United States dollar, right? So major currency pairs are pairs that are traded against the United States dollar. Example, we have USD card, we have GBP USD, we have Euro USD, we have AUD USD, right? We have HF, right? So those are the 7 major currency pairs that we trade in the forex market. These currency pairs, they have the highest liquidity, meaning there is money available in that particular market. Remember, it's major currency pairs, and they are pairs that are traded against the United States dollar, right? Great. Then another characteristic of the major currency pairs, yeah, USD card is my favorite. Yeah, I like it a lot. Yeah, and another characteristic of major currency pairs is that the market is volatile. Like the market moves. You see it going up, coming down, going up, coming down. So the market moves, right? So there is movement in the market, and there is little spread. Spread is the commission you pay to the broker. It's like the difference between the ask and the bid price. So we'll know more about that on the key concepts. So remember, we have 28 currency pairs, and inside the 28 currency pairs we have 7 major currency pairs, meaning the remaining 21 are minor currency pairs. Now, minor currency pairs, unlike major currency pairs that are traded against the USD, minor currency pairs are currency pairs that are not traded against the USD. So we have a pair like GBP JPY, that's the Great British Pound traded against the Japanese yen. We have pairs like AUD card, the Australian dollar traded against the Canadian dollar, right? We have NZD JPY, right? So minor currency pairs are pairs that are not traded against the United States dollar. Now these pairs, they are volatile too. The market moves, liquidity there is good, is minimal, and the market does not really move compared to how the major currency pairs market move, right? And their spread is somehow minimal too. Yeah. So aside the major currency pairs, the minor currency pairs, we have another type of currency pair called the exotic currency pairs. Now, exotic currency pairs are dollar currencies from developing countries paired against the United States dollar. Example, USD XOF. So XOF is the symbol of the Cameroon francs, right? So in the forex market, it's being read as XOF. So USD XOF is an exotic pair because USD is a developed country, and XOF is the symbol of Cameroon, which is a developing country. Now, this market, the market of exotic pairs, they rarely move. The market is just like this. It does not move. It does not move, right? So exotic pairs are very, very slow. As a trader, I have never traded any exotic pair, and I doubt if I will ever, right? Yeah. So we also have like USD NGN, that's the United States dollar traded with the Nigerian naira. That's an exotic pair. USD ZAR with South African rand, yeah. So stuff like that. So aside that, we started with key concepts in forex trading. That's like regular terms that we as traders use, right? And some concepts that will apply when we start trading. The first was pip. So we looked at what a pip is, and we defined a pip as the smallest movement on the chart. So a pip is the smallest movement on the chart. Just like how you can walk and you count steps, right? Not steps, kilometers and stuff. In forex, the market moves in pips. Yeah, I like as you guys are um collaborating in the comments. Yeah, so in forex, the market moves in pips, and we give a great example that if we are trading a major currency pair like GBP USD, the market is at 1.2 thousand. The market moved to 1.2 thousand and two. How many pips has the market moved? Everybody answered 2 pips. Right answer. Right? So pip is the number of steps that the market has moved. That's it. Please, is the pip something like a time frame? No, time frames are different. We have time frames like 5 minutes, 15 minutes, 30 minutes, 1 hour, 2 hour, 4 hours, 1 day, 1 week, 1 month. Those are time frames. So time frames is like the different times in the market, right? How the market reacts over time. Yeah, so we'll get to that later. But pips, we have said, is the movement, the steps that the market has climbed, either going up or coming down. So we looked at a pip. Another example, let's say we are trading a minor currency pair like AUD card. The market is at 1.3 thousand, and the market moved to 1.3 thousand and 10. That means the market has moved 10 pips upwards. Do you get? Okay, someone says, I now know what a pip is. That's awesome. Yeah. So in that case, the market has moved 10 pips. So that's how we calculate a pip. So now I am just showing you guys, okay, manually, theoretically, but when we get to the chart, that will be tomorrow. So tomorrow we are starting with technical analysis. But for now, understand all these key concepts. So when we get to technicals, when we get to strategy, you guys will be awesome. Yeah. So aside pip, we looked at lot sizes. So our next key concept was lot sizes. Now we said lot size is like your trading volume. Yeah, so a lot size is like your trading volume. Trading volume, your lot size determines the amount of money you make or lose on a particular trade. Be like, pay attention here, right? Because lot sizes matters a lot. If you mess up here, you have either blown account or you've made excess profits. Yeah, so your lot size is your trading volume. It determines the amount of money you either make or you lose on a particular trade. And we have different types of lot sizes. The first is standard lot size. So standard lot sizes, it's often referred to as lot size 1, right? That means from 1 and above. From number 1 and above, it's called a standard lot size. And now, standard $10. So if you place a trade and you are using standard lot size 1, and the market moves 1 pip, you make $1. you make $10. So for standard lot size 1, for every pip the market moves, you make $10. So assuming you are trading USD card, the market has moved 10 pips, right? And you are using standard lot size 1. How much have you made? Answer fast. Assuming you are trading USD card, the market has moved 10 pips in your favor, that is in your direction, right? And you are using standard lot size 1. How much have you made? Okay, $100. Everybody's saying $100. I'm clapping for you guys. Perfect, right? Perfect. So to know the amount of money you will make is just the number of pips that the market has moved multiplied by the amount that one pip gives you on that particular. Ask question. Ask young bearer. I asked a lot of questions. So are we there? Now, assuming we have said standard lots are greater than 1, that is from 1 and above, meaning if you see somebody using lot size 2, it falls under standard lot size 3 standard lot size 100, it falls under a standard lot. Okay, question. Assuming we want to buy on USD card, right, and the market moves 20 pips in our direction, and we are using standard lot 3, how much have we made? I'll repeat it again. Assume in our favor, that is the market has gone up, and we are using standard lot size 3, how much have we made? I'm seeing different answers here. Oh my god. I'll repeat the question one last time for you guys to use your smart brains. Assuming we are buying on USD card and the market has moved 10 pips in our direction, which means we are in profit, and we are using standard lot 3. We are using standard lot 3. How much have we made? First of all, ask yourself that using standard lot size 3, how much is 1 pip? When we are using standard lot 3, how much is 1 pip? Answer fast. Well, when we are using standard lot size 3, 1 pip is equal to $30, right? And now the market has moved 10 pips in our direction. It means we are just earning our number of pips that the market has moved multiplied by the amount that 1 pip gives. So you take 10 times 30, it gives us $300 in profit. Simple. Young bearer, you have gotten it now. Yeah. So the right answer is $300, because 1 pip using standard lot size 3 gives us $30. So you take a $30 and you multiply by the 10 pips that the market has moved. So you'll be earning $300. Simple. Remember, if you're using lot size 2, 1 pip gives you $20. If you are using lot size 4, 1 pip gives you $40. If you are using lot size 5, 1 pip gives you $50. If you use lot size 10, 1 pip will give you $100. So and so on and so forth. So that's how it just keeps progressing. That's why I said your lot size determines the amount of money you either make or lose. Same as if we wanted to buy on USD card, but okay, let's say something happened, our analysis glitched, and the market went down, like the market started selling down, the market sold down 10 pips, we will still lose $300. So your lot size tells you the amount of money you make or lose on a particular trade. I got it, the first answer. Petrus, very, very right. Yeah, very correct. So $300 was the right answer. So can we go now to the next type of lot size? Have we all understood standard lots? Okay, perfect. So the next type of lot size is a mini lot size. Mini lot size. So mini lot, okay, good. Somebody else has given it already. I love serious students. I love serious students here. So a mini lot, right, 0.1. So a mini lot is often referred to as lot size 0.1. So 0.1. And now it runs from 0.1 right up to 0.9. So from 0.1, 0.2, 0.3, 0.4, 0.5, 0.6, 0.7, 0.8, 0.9. All of those are mini lot sizes. And with mini lot, if the market moves 1 pip, you make $1. $1 rather. So with mini lot, if the market moves 1 pip, you make $1. 2 pip, $2. 3 pip, just like that, right? So with mini lot, if you are using mini lot size 0.1, 1 pip gives you $1. Okay, example, we are buying USD card, the market has moved 10 pips in our direction. We are using mini lot size 0.1. How much have we made? We are buying USD card, the market has moved 10 pips in our direction, and we are using mini lot size 0.1. How much have we made? $10. Oh, you guys are awesome. Simple, right? So that's how you understand lot sizes. Same as if we use mini lot size 0.2, 1 we make $2. If you are using mini lot size 0.3, if the market moves 1 pip, you make $3. If you are using lot size 0.9, if the market moves 1 pip, you make $9. That's it. Petrus. Awesome, right? So have we all understood mini lot size? Can we go now to the last type of lot size? Can we go to the last type of lot size? Okay, now the last type of lot size is the micro lot size. So we have micro lot size. We have seen standard lot, mini lot. Now we are on micro lot size. Majesty, awesome, yeah. So we are on micro lot size. Now the micro lot size is often referred to as lot size 0.01. It's the smallest lot size. The micro lot is the smallest lot size, right? Like if the market moves 1 pip, you earn 10 cents, right? So with a micro lot, you guys are having network failure. I am sorry, but not to bother. The video will be, I think the video is automatically being recorded, and I'll drop on my page, so you can always come back to watch. Maybe you just forward, then you watch. Yeah, so with micro lot, if the market moves 1 pip, you make 10 cents, right? And 100 cents make $1. 100 cents make $1. So if you're using micro lot 0.0.01, you need the market to move at least how many pips for it to make $1? Let me take it over. Micro lot is often referred to as lot size 0.01. So we have from 0.01, 0.02, 0.03, 0.04, 0.05, 0.06, 0.07, 0.08, and 0.09. All of those fall under micro lot size, right? And if you are using micro lot size 0.01, 1 pip gives you 10 cents. Following our same example of buying USD card, and the market has moved 10 pips in our favor, right? And we are using a micro lot size 0.01. How much have we made? If the market has moved 10 pips, okay, we'll just take 10 pips and multiply by the number of cents, which is 10 cents, right? So it will give us 100 cents. And that 100 cent is approximately $1. Simple. Same as if we are using micro lot size 0.02, if the market moves 1 pip, we make 20 cents. If we are using micro lot size 0.03, if the market moves 1 pip, we make 30 cents. So note that 100 cents make $1. So micro lot is really small, but as a beginner trader, as an amateur trader, as someone who is just like okay getting started, you should start from micro lot sizes because it will help you to gain confidence, to grow your account, and to protect your capital. Okay, which lot size is recommended to use as a beginner? Micro lot size. So you can start from lot size 0.01, then you keep progressing. Maybe you go to lot size 0.02, 0.03, like you keep growing that way so that it will build your confidence first. Because if you are just starting, then you want to go and use lot size 1. Imagine that you have funded, let's say you funded your $100 account, right? And you are using lot size 1. Remember, 1 pip gives you $10. Either gives you or makes you lose $10. And on your $100 account, you have placed a buy on USD card. The market just goes against you 10 pips. Your account is gone. Your account is finished. Your account is blown. You have zero capital left, right? But if you start from lot size 0.01, right, you know that the market needs to move before you even blow that particular account. So start from lot size 0.01 to build your confidence first and to backtest on your strategy. All right. So after lot size, the next key concept we have is leverage. So leverage, I'll just put it in my own terms, the way I understand it and the way I use it. So leverage is like borrowed capital, right? It's like bargaining power. So the broker gives you a leverage. Let's say the broker gives you a leverage of 1:1. 100, and you have an account size of, let's say, let me calculate that, and you have an account size, automatically means, aside having an account size of $100, you can automatically trade a $10,000 account size. Meaning you can open larger positions, multiple positions, you can use bigger lot sizes, right? So leverage is just the broker giving you another opportunity in the market. So you have an account size of $100, the broker gives you leverage. Leverage means you can make let's say with a leverage of 1:100, you can make 100 times what you have in your account. So you just take your account size, you multiply by the leverage. That's automatically the new account size that you are actually trading. So leverage can help you positions, you can use bigger lot sizes calculatedly, but then it can as well go against you. So it is like a two-way sword, in as much as, okay, you now have opportunity to trade a larger capital that you didn't originally have, right? You can be swept away, you can be lured, you can be moved to, let's say, open multiple positions and the trades go against you, so you tend to lose more. So leverage is two-way. It could be positive, it could be negative, but it's good though. So are we good? Are we good on that? I hope my network is not feeling me too. I think it's good. Okay, clear. All right, nice. Okay, David. Okay, Nalis, let me take it again one more time for you, right? Okay, so leverage is like borrowed capital. You have 1,000, right? And you are trading under me. I give you the opportunity to trade 10,000. That means I give you the opportunity to trade as though you have a 10,000 account and not a 1,000 account. So leveraging is like borrowed capital. It's like opportunity for you to trade a high capital. Is an opportunity for your account size to add, right? Now you have an account size of $100. That is what you have. That is what you can afford at the time. But then the broker, which is the person who gives you access to the forex market, gives you a leverage of 1:100, right? It automatically means the 1 represents what you have in your account. Is 2 means multiplication. 100, right, means what you have in your account times the leverage is your new account size. Like you have the opportunity to trade a $10,000 account size with just $100 deposit. So leveraging gives you opportunity, it gives you access to larger capital. And now if you have a large capital, you can open multiple positions, you can use bigger lot sizes. So I hope that is clear. And now, when you have a larger account size, when you open multiple positions, okay, your analysis was A plus, you place your trades, it goes in your favor, you make money, right? But you originally had a small account size, but the broker has given you leverage so you can trade a large account size and make money. Same time, if you place your trades and they go against you, you're going to lose more because your account size was much. You use bigger lot sizes, you open multiple positions, so you have lost more. So leveraging can be two-way. So the best way is that you should not over leverage. Just be fair, just have a balance. Yeah, just have a balance. And now Xness gives you a leverage of 1 is to unlimited. It means you can make mad money. Yeah, so uh okay, so you guys have gotten it now. Yeah, so when you'll be creating your let's say your live account, you can choose the leverage you want. 1 is to 200, that's fine. 1 is to 1 is to 2000, that's totally fine. Yeah. The next key concept is equity. Equity, normally it's like total capital. So equity is your account balance, right? Your account size plus any unrealized profit or loss. So it's just a normal term. Okay, the next key concept we have is stop loss. Most traders call it SL. So the next key concept is a stop loss. Guys, I cannot over. Let me record this. I cannot. Let me just record this. So are we good? So we're taking the next key concept now. So the next key concept we have is stop loss. Guys, I cannot overemphasize on how important a stop loss is. If you don't want to lose weight, if you don't want to be depressed, if you don't want to lose your mind, if you don't want to lose appetite in your favorite food, never trade without a stop loss. Please, never. Oh. I am saying it now in front of you all. Never trade without a stop loss. So a stop loss is a particular order that is set to automatically close a trade at a predetermined loss level, right? So let's say you place a trade to buy USD card. The market got to a certain point and started selling back down. Now if you don't have a stop loss placed, the market will sell down until it clears off everything you have in your account. But let's say you want to buy USD card, you're buying up. When we buy, it means we expect the market to go up. Now you're buying up. Now you've set your stop loss at a level that you are comfortable risking. Let's say your account size is $100. You set stop loss at $10, right? That means you are comfortable risking $10 on that particular account. So you just place stop loss here, meaning if you expect the market to buy, the market buys, the market gets here, starts selling down, hits it and close. You still have $90 in your account to trade tomorrow. But if you don't have a stop loss place, the market will just go down and take all your money. You'll cry, you'll be depressed, right? So never ever trade without a stop loss. It's very important. So it helps you to protect capital and your sanity. Yes, because trading like that can make you to lose your mind, right? But I am very normal because I can never place a trade without a stop loss. Never ever. I mean, if you love your money, if you know money management, yeah, risking is nice. No risks, no Ferrari, right? But take calculated risks. Yeah, so you can still risk, but you put a stop loss. That's risk management. Yeah. So never trade without a stop loss. So if we are buying up, our stop loss has to be placed below. If we are selling down, our stop loss has to be placed above. Simple. The next key concept is take profit. Most traders call it TP, right? So TP is like the opposite of stop loss. Guys, when I hit TP, you hear traders saying, hey, full TP smashed, full TP, full TP. When I hit TP, I am the happiest. Like, it's the best time of my life. Oh. Hitting TP means you have analyzed your trade, you've analyzed the market, then the market moves in your direction, right? And hits a particular level that you had placed, that when the market gets there, it should close. So that's your take profit. So take profit is a particular order set that when the market gets this predetermined level, it should automatically close the number of profits, the amount of profits I have made. Just imagine that you still on our USD card, we want to buy, we have bought, right? The market has gone right up, but we were busy, we got distracted, we could not close it manually. So the market went up, retraced, and started coming back down. As the market is coming back down, that's you losing all the money, all the profits that you had made, right? But if you had a TP set strategically, because you don't just place it anyhow, so I'll teach you guys how to set it. So if you have a TP set like here, then the market has bought and reached there and just closed, right? That's that you've made money and the money has just closed and just chilled. But if you didn't have it, if the market buys up and starts selling, you lose back everything. So TP is very, very important, just as stop loss. And we should always aim for 1:2 at least on every trade. Aiming for a risk to reward ratio of 1:2 means if your stop loss is $10, it means your take profit. So take profit is your reward, stop loss is your risk. So if your risk is $10, it means what you are aiming to get, it means the reward that you are aiming to get should be at least 2 times your risk. So if we are risking $10 on a particular trade, we should be aiming for a take profit of $20, $30, 40. It should be at least 1:2, right? Because your risk cannot be greater than your reward. It means we don't even know what we are doing. Yeah, so we should always target for at least 1:2. That means if you are risking one, you should be aiming to have 2 times it. Perfect. It really, really helps. I've seen a good question here. What website will you recommend for backtesting a strategy? Xness Web Terminal. As you've created your trading accounts, right? When you go to open it, you see the option of using Xness Terminal at I think MT5. Use Xness Terminal. You backtest there perfectly. Like, I like it. And fun fact is you can analyze there and just trade there. You don't need to analyze there and then you go to MT5 to go and place trades and stuff. You analyze there, backtest there, you place trades there, you see the market moving there. So Xness Terminal, perfect. Any other question? Any other question? Any other question? Okay, I'm good on my side. Wow. It means you've understood everything. We'll write exam. I hope you guys know. Yeah, okay, well, if you've understood everything, then I am glad. Okay, now the last key concept I'll share is spread. So, spread is the commission you pay to the broker, right? So, when you start placing trades, you see that when you place a particular trade, the market first of all starts in red. Red means losses, right? Before the market gets to blue. So that small negative before your trade starts running is the spread. So spread is like the commission you pay to the broker. Is the difference between the ask and the bid price. Now the ask price is the price level where you want to place, let's say, your buy or your sell. Let's say this is the market is here, right? So you press buy here, the market opens is just like slightly above. The market can take like 1 pip before actually opening. So the ask price is the price where you want to get into the market, and the bid price is the price where the market actually opens. So that's small, like it's very small. You guys will hardly notice it, especially with major currency pairs. But if it's exotic pairs, the spread is wide like this. Like you can ask here and the market opens here. So major currency pairs are ideal. How will you know the currency pair to trade at a particular time? Excellent question. Well, I was hoping for us to do forex price quotes, but now you're asking other questions. Well, now to know the right currency to trade at a particular time, right? We have what we call trading sessions. Trading sessions, right? We have the first of all start with the London session. So the London session opens, I don't know your time frame, like where you are, but where I am, the time frame that the London session opens is 8 a.m. So the London session opens at 8 a.m. in the morning, right? Then it runs till like 10 p.m. at night. Then we have the New York session. So the New York session, that's like USA. You know that when the New York session opens, you should be trading USD pairs that have the United States dollar. So the New York session opens at 1 p.m. at noon and closes still around 10 p.m. Then we also have the Asian session. The Asian, that's the midnight session. Now for the London session, you should be trading pairs that have that particular currency. Pairs around there, like GBP, the Great British Pounds, right? You should be trading like Euro. You get. While for USD, you should be trading for the New York session, you should be trading USD based pairs and stuff. For Asian session, you should be trading JPY. Asian is like the Asian continent. We have like Japanese yen and stuff. So that's how you know the right currencies to trade at any time. I am in Ghana. Oh, nice. Well, I don't know the time. I think what I use is it GMT plus one? Yeah, so I think it's same. I think Cameroon has same time frame as Nigeria. So maybe Ghana is the same. So that is it. Our class has been going on for an hour already. And I really wanted us to do forex price quotes because when we start with technicals tomorrow, we need to know them. But it's actually very short. Maybe we can do it tomorrow before starting. So it's very short. So we do it tomorrow and then we start with technical analysis. So thank you guys. Any question for Madam before Madam ends the class? Any question so we can conclude? Excuse me, my throat is failing me. In Zim, you mean like Zimbabwe? Okay, if you guys don't have any question, thank you guys for being here. So tomorrow, wait, you guys should create your trading account because tomorrow we'll start using our trading account. So please refer back to our Telegram channel, create your trading account, right? And link it. So tomorrow we have, yeah, so by tomorrow we all should have trading accounts. Yes, please. Yes, please. Yes, please. Which one is more profitable between gold and currency? It depends though, but in as much as gold can make you a billionaire, it can make you a church rat too. It can make you very, very poor. Yeah, but then it depends on which works for you. Yeah, like someone like me, I rarely trade gold. I trade once in a while. I mostly trade major currencies because that's what has given me the most money, especially my USD card. So with gold, I trade once in a while, but gold is volatile, like it moves. Yeah, and there's money there. So it depends on you. So when you learn, you get to pick your favorite pair, the pair that will give you the most money and the pair that you are comfortable with. Yeah, so it just depends. I have difficulties in verifying my account. Precious, please, I think you can text me on Telegram, but I think the verification process is seamless now. If you have like your national ID, you can just verify. For proof of residence, maybe you have a utility bill in the house that you can use. I think that works. What about the live account? Well, for now, you guys need to have like a demo account first, like a practicing account, right? So please create a demo account for now. Confidence, then together we'll trade your live accounts. Can we practice using a demo account? Yes. So create a demo account with account size of $200. Don't go and put 1,000, 10,000. No, no. $200. Don't add it. Yes, I have the ID card, but I still have difficulties in verifying the account. I think I really do not know